We just had a presidential election. We're going towards maybe some more volatility, more than people remember. Doesn't seem that bad compared to history if you look back.
It's true.
But if you look at the crystal ball, we usually save this question for the end. But if you had to look into the crystal ball today,
And I am looking in the
where are
crystal
we
ball.
headed maybe the next 6, 12 months?
It's interesting. We've had a correction, a 10% correction, and normally the market goes down 10%. And some of the sentiment indicators I look for, like put buying, some of the surveys from like the American Association of Individual Investors and whatnot, normally you'll see a spike in put buying, you'll see a spike in bearishness. We got to some pretty extreme readings here over the last couple of weeks. So it's interesting how we're down 10%, but a lot of investors are acting like we might be down 20% or more. And I think what it is, it's the Mag 7. There's been a lot of volatility around the Magnificent Seven stocks. And I think that's where most clients or most investors today, that's what they have. And it's almost like the rest of the market doesn't exist. And I think watching those stocks go down, in some cases 20, 30, 40%, some of them from their peaks, they really have surprised people. And everybody loves volatility when things are going up. When then we get downside volatility and everybody starts to hit the panic button. But I think ultimately, as the year progresses, it's going to get back to the Fed. What does the Fed do? How does the economy perform? And ultimately, it's about earnings. And if earnings estimates are correct, we should have a pretty decent recovery at some point this year. But obviously, the economy is what it is. We just don't know what some of these changes in policies could give us.